Actually, it would be myself, Julian Sebiano. Thank you.
I'm sorry, Julian. I'll turn it over to you guys. Have a good one, guys.
Thank you very much. So good morning and good afternoon, I guess, depending on where you're watching in the world. My name is Julian Sebiano. I am a senior advisor at Promontory Financial Group. I lead our fintech and digital assets practice. This morning or afternoon, we will be discussing regulatory developments in banking and digital assets in particular. In a minute, I'll ask the panelists to introduce themselves. I myself, again, am Julian Sebiano. I'm a senior advisor at Promontory Financial Group. I lead our fintech and digital assets practice. I've had the privilege over the last several months of working closely with the Wyoming Division of Banking and helping them build out the supervisory program specifically for digital assets for the new classification of banks, BDs, which is a great advancement, and we're very excited about that. This morning we'll be speaking about some of the opportunities that for banks serving as digital asset custodians. We'll be talking about some of the challenges some of the historical challenges that we've seen from banks, preventing banks from entering into this space. We'll talk a little bit about the competitive outlook for banks versus digital assets firms, and we'll go into some conclusions as well. But before we do that, maybe I should pause and see if I can ask my esteemed panelists fellow panelists to introduce themselves. Maybe we can start with you, Director Lammers.
Good morning or good afternoon, whichever the case may be, and it is an incredible honor to be here today. I greatly appreciate the opportunity to talk in Wyoming, the state that brought forth the first women to vote, the state that brought forth LLC, and today we're talking about digital assets. My name is Kelly Lammers. I'm director of the Nebraska Department of Banking and Finance. I have been director for 2 weeks, so with that, give me a little slack. At the same time I say that, I've been a regulator for 30 years. I've also, prior to that, I worked with a state bank, a national bank, and an industrial loan and investment company. I've worked applications of bankers banks, credit card banks, talk a great deal about Nebraska community banks. So I'm looking forward to the day, and thank you for this opportunity.
Thank you, Director Lammers. And Dr. Sindhu?
Yeah, I'm Dr. Sindhu Bhaskar, and I'm the chairman and founder of ESC Global Inc. We are based at Cambridge Innovation Center, MIT. That's the head office, but we have our globally 16 offices, wherein we are trying to have more and more bank licenses so that we can launch our digital banking and connect them through our common blockchain, so that we can do all the settlements, we can create all the digital assets. Right now also, we are launching one neobank in India. We have tied up with EcoBank in Africa. But all this banking and digital banking effort is geared towards development, financial inclusion, and banking the unbanked. So it has a very specific purpose with which we are developing all the banking and digital assets. Thank you.
Thank you. And Mr. Revill?
Thank you, Julian. I'm Joel Revill. I'm the CEO of Two Ocean Trust based in Jackson Hole, Wyoming. Native of Wyoming. It's great to be back here in my home state after living out of state for about 25 years. I started my career in the investment banking program at JP Morgan in 1992. I spent several years around the world with JP Morgan and migrated to the investment management side of the industry, where I've been for the last 15 years. Most recently, portfolio manager at Citadel, before returning back to Wyoming and launching Two Ocean Trust. And also very proud to serve on the select committee for blockchain, financial technology, and digital innovation as an appointee by Governor Gordon. And looking forward to this opportunity, and it's great to be with this panel.
Fantastic, thank you, and thank you all for taking the time this morning to join us. I think let me set the stage a little bit, and then we're going to go into we'll talk a little bit about, we'll do some question and answers for the panelists. We're speaking at a Wyoming conference, so we can't start without congratulating kind of the Wyoming legislature and the Wyoming Division of Banking on the recent approval of the first digital bank to receive a bank charter in the U.S. And the development of the Speedy charter and program. Having been intimately involved in the supervisory program, I know that this didn't happen overnight. I know that this has been a multi-year journey for Wyoming, and that they have executed a very deliberate and comprehensive approach to establishing the legal and regulatory framework necessary to support digital assets. That they've been working closely with the legislature, they've been working closely with other regulators, they've been working closely with their applicants as well, and they've been reaching out to the private sector. And I think that's the way to do it. I think in the previous panel, there was some discussion about that as well, and the need for the public and private sector to really collaborate closely, particularly when in areas where technology will frequently outpace policy, and where safety and soundness is needed in order for the economy, for certain technologies to grow and prosper. So as the Speedy Charter has been taking off, the OCC has recently joined the Digital Assets Party, or shall I say, they've entered the fray. And a couple of months ago, they issued an interpretive letter that I'm sure everybody's aware of, essentially clarifying that national banks have the authority to custody digital assets. And just last week, on Monday, they issued a second interpretive letter, in this case, actually not in response to a request, that clarified that national banks are able to hold reserves for certain types of stablecoin issuance. Again, I think very useful from the perspective of signaling that national regulators are supportive of digital assets activities, and also useful from the perspective of providing some guidance. And I'm certain that we can expect more guidance from the OCC and other regulators as well. Maybe I might stop there for a second and maybe get some if there are any impressions from the panelists on recent announcements, not to put anybody on the spot. And before I go into talking a little bit more about the opportunities for in this space in particular.
Julian, I'll kick this off as the regulator of the group. And as you referenced, none of these items really directly reference Nebraska. What I want to bring to the conversation is more that larger consideration of what is a digital asset. Point out that as Wyoming walked into this environment of saying, let's build a digital bank, they reinvested, reconsidered, and rewrote their Uniform Commercial Code. Spent incredible amount of time developing what is the law and enforcement behind this representation of digital ownership. And I think that's a key part of the conversation as this matures, as we're able to identify something unique, that we're able to say that there is a law that addresses how that's to be handled. As a regulator, I would be amiss if I didn't mention the fact that there needs to be boundaries. I'm from Nebraska. How do you drive down a gravel road and how do you stay between the ditches? In this case, what are the barriers? Is there capitalization? Unlimited growth, scalability, of course that's available with any type of monetary system, but is it responsible? Is it safe and sound? And so as I toss this out, what I want to do is reflect on what's being brought to the table is very opening. It's very engaging. It is enabling. But the conversation in return is, how are we going to present digital assets in a way that they're capitalized, they are able to be responsive to other people's holdings, and they're able to be audited, identified. But it's very good steps.
I look at these digital assets as one part of the whole digital economy and digital monetary system. which is again CBDCs, digital assets, different cryptos, which are looking to give a new definition to money. So all these are now getting connected and interconnected, and with all regulatory approvals and all, we are definitely moving towards a digital economy and giving a new dimension to the definition, the nature, and the structure of digital monetary economy. Because till now, our legacy banking system has been based on, say, fractional reserve system, and that's how we were operating. So with all these things, digital asset plays a very, very important role, as it will also guide the position and the role of banks in days to come.
Julian, I'll add that I think the recent announcements are exactly what the industry needed. There's a natural tension between regulation and innovation that is expected to exist. But what isn't helpful is a lack of clarity. And so I think that the more clarity that the federal regulators and other state regulators can bring, the better for everyone. And Wyoming has done an enormous amount in this regard, and I hope that others will follow in our footsteps.
Yeah, thank you. And I mean, so I guess to summarize some of the statements, I think, and then I think it's a perfect segue to talk a little bit about the opportunities and maybe what has been the constraints for growth in digital assets. Absolutely, there is a strong need for clear guardrails around how digital assets, around the digital assets industry, around digital assets activities, both to provide regulatory certainty for the institutions that are entering into this space and to provide a level of protection appropriate for the participants, for consumers and others. It's and there's an enormous potential, as you said, Dr. Sindhu, as well, for this asset class to really fill a void that isn't being addressed in the existing monetary system at a national level, at a global level as well. There's an efficiency aspect to it, and there's a lot of utility, and probably there's utility that we don't even realize today, given the level of innovation that is occurring in this space. If you think about it, over the last few years, this asset class has increased from $13 billion in market capitalization to, I haven't seen it, but I think it's around $350 billion today. The vast majority of that is Bitcoin, but it's there are many other coins and other tokens that are being introduced as well. What we haven't seen, and I think that growth has been constrained, and I think that there's a few reasons why that growth has been constrained. And one has to do with the lack of regulatory clarity, which inhibits a lot of large institutional players from actually entering into the space. And I think it also has to do with, this is a new technology. There are growing pains. We can go into the panel and into some of the kind of the major risks and challenges, but with every one of these issues, that's really what we're seeing. We're seeing, that there are some very significant and real challenges. Having said all of that, I personally think that there's a lot of pent-up demand for bank grade kind of custody services. I think as the Division of Banking in Wyoming is successful, Director Lammers, I think you hit it right on the nail, right? You have to start with the fundamentals. You have to address the laws that underpin these assets, and you have to build a comprehensive approach towards supporting digital banking activities so that all participants are comfortable and they understand the rules. So I guess maybe I'll pause now and see if there are any reactions to those comments.
Julian, thanks. I'll add, the market is already big today, but I think it's just a fraction of what it's ultimately going to be. There's no reason in my mind why digital assets won't mirror the other existing asset classes, equities, fixed income, et cetera. with the potential to extend into our payment system, it could even dwarf those asset classes. So I think it's an enormous opportunity, and the more clarity that we get from our legislators and regulators, the sooner it will happen.
Like generally all the assets from a banking point of view, what we see that we classify the assets based on the ratings, and on the basis of that rating and classification, we use them as our statutory capital as well as for lending purposes. Now, for digital assets, we have to go into all these aspects for sure, because if you go back since 2008 and all those economic meltdown and all, we call them assets, but there were no assets. So similarly, in digital assets, are we going to really have some asset, or we are not going to have those assets? Because they may be conceptual assets. Right now, what we are seeing, there is a mad rush to classify and create cryptos for everything. Now, our dreams cannot become an asset for sure. Our say motivational talks cannot become an asset. Okay, for some, those who are pissed off, those who are suffering, some motivational talks can pep them, but not in a universal manner. So that is the most important thing, and how we can integrate them to the banking sector. That is the most important and fundamental need of the hour. And their regulations must be very, very clear that what position we are going to give to them and what sort of commodities can be used as asset. Again, we can, there may be, okay, gold is there, different other precious metals and semi-precious metals are there, commodities are there, real estates are there. So are we going to have tangible assets backing those digital assets, or getting converted into digital assets, or even intangibles can be created as converted to digital assets? And will they have the same valuation for lending purposes? Because ultimately, if there is no lending, there cannot be any economic growth. So all these factors have to be reconciled in a real manner. And then only we can say that, okay, we have reached a point wherein digital assets can be of real use. When while creating our own digital banking, what I thought that the best is, when economy was getting like restructured and organized, we went back to gold as the backup asset. So I thought that, okay, when we are moving into digital space, let gold become the same guiding asset to streamline whole thing. So we created a gold backed token to act as the transactional token on our banking blockchain, so that we know that yes, there is a definite asset backing this token, and it can play the role of a security. Then what will happen? Our banking, because see, with digital asset, the biggest problem which what I see is the fractional reserve system of banking. That comes into my mind all the time. But even if we try to change the Basel III norms and the guiding principles of classification of assets, those are different things. Let me put it like this. But still, there has to be some basis to get hold of these digital assets. Otherwise, everything will be passing off as digital asset, and again, we will reach the same space.
And to kind of bring this to a full circle, it quickly is clear that how we brand or identify, charter, or license financial activity makes a big difference in what we call an asset. So as we bundle together a digital asset, as we create this digital package and we place value inside of it, it becomes a conversation that deserves transparency, and then it deserves a discussion: is there growth? So to circle back around to that first question, is there growth? As a regulator, I watch what industry does with other people's money. So if other people trust a certain charter, a certain license, we see movement relative to those reports that they send to us as government. One of those indicators out there not a bank, because it's under a different brand. It's called a non-depository trust company. That's something that's relatively widely held throughout the United States. Those types of entities exist in Wyoming. They exist in a number of other states, including Nebraska. I happen to be a member, and I have analytics to a group called Conference of State Bank Supervisors, and they send me graphics from time to time looking at the assets that are in non-depository trust companies. And these are the things that people bring in and they say, I own this. I have a farm in Western Nebraska. I would like somebody to help me manage that. I own digital. I would like somebody to help me through this conversation as how do I manage that as I'm getting up in the years. Numbers that I'm able to derive from 2019, that market was a little over $1 trillion. So that's assets under supervision. 2020, not all the states reported because of COVID. We're in the middle of a pandemic. So I have a 14% variance, and the number that I'm working with is over $2 trillion. So there has been a tremendous growth out there relative to generational transfer of wealth. There's a considerable conversation relative to what is an asset and how do we identify it. And then we get down to digital. Are we talking coin? Are we talking token, non-fungible token? We need to brand that and explain it with full transparency as to what are we working with and how do we handle it. But to answer your question, where's the market? I believe we're starting to see an element of liquidity, an element of marketability that simply has not existed before because of the ability for digital to fractionalize ownership, to offer disposability to income, to make it instantly clearing. So I believe the growth potential is tremendous.
Thank you. And that I would add that a famous, a well-known evangelist of Bitcoin, a very, very early investor in Bitcoin that I won't name, but this comment is relatively public. It once basically told me, I think about Bitcoin as I think about a measure of a measure of distance or a measure of weight. I think about it in the concept of, why is it that all of our measures of value are relative to another asset class? And why isn't it that we have an absolute measure of value similar to where we have in weight, and we have for other areas? And it always struck with me as a kind of a philosophical kind of discussion. I'm not certain that Bitcoin is that, but what I think is really interesting, and I think all three of you touched on this in your comments, is that it is in many ways, blockchain is an element of infrastructure which underpins either the collection or transfer of value. And what we're seeing now, is we're seeing a convergence. I mean, a few of you talked about this. When does this become real? From when does this asset, and how is the asset classified? How can I use this asset in ways that I use other traditional monetary assets? And how can I do that? And, the classification and how it's regulated it plays a role in that. What I find really interesting, and I'm really looking forward to the next, 6-12 months of development, is how stablecoins are really bridging that gap between, and I'll just use plain language, on balance sheet and off balance sheet, right? You have one asset which has elements of both, and how are those activities managed? How does I think when those of us in the industry have a much more detailed understanding of the different types of stablecoin networks and the relationships and how they work, the underpinnings behind them. I think that the recent announcement from the OCC just scratches the surface of the very, very basic type of activities that stablecoins can do. And then I think this is a good segue to talk a little bit about what we think the banking sector's role is in the development and the growth of digital assets. I will say, maybe to tee up the conversation, I've had lots of conversations with large bank custodians, with digital assets firms, and every time I have a conversation, I'm surprised by the different types of use cases that different entities are thinking about, or their objectives in terms of growing the digital assets banking class, or leveraging it. It's interesting. And I guess I would ask maybe the panelists, what are your thoughts with regards to what is the role of a bank, be it a national bank, state chartered bank, or a trust, versus what do we think is going to be the role going forward of digital assets firms? Do we think that there will be partnerships? Do we think that there will be collaboration? Do we think that there will be acquisitions? Do these players participate together? Do they participate separately? What sorts of roles are there for the different players in the industry?
I think it all depends what is going to be the nature of digital assets, because if you see, I will consider CBDC as a sort of digital asset for the nation itself. Of course, it is the biggest sector, like monetary system of the country, but still, it is the biggest asset for any country. But we have to look at it that which way is it going to be, wholesale CBDC or retail CBDC, because that will determine the nature of that digital asset. If it is wholesale, then centralized. If it is retail, maybe not centralized, but if you see Chinese yuan, digital yuan, then of course, even being retail, it is still centralized. Then again, we go back to the other classifications. And most important thing is our economy is political economy, whereas currency is dominating. Dollar diplomacy and dollar supremacy cannot be subjugated to any other form of digital asset. And no other digital asset can be allowed to subjugate US dollar supremacy, which is, that is how Chinese and all this trade wars are going on. So are we able to get rid of our, human psychology of global supremacy and national jingoism? Even that will determine the nature of our digital assets. Then how we are trying to create the different DeFis and DAOs in our country, and what roles we are assigning to them. Again, that will determine our digital assets. And again, as our worthy panelists spoke of different sort of digital assets, again, we go back to the same classification, that what will be the nature of asset and their classification, because it has to be backed by some sort of asset. Then only we can call it a digital asset. It is only changing the form from earlier, equity scripts were like in material form. Later on, they became dematerialized. So it is the same thing. We are not doing anything else. It is just the evolutionary process. So, and the most important thing again will be that globally, there are different stages of development and underdevelopment among different countries. So how these digital assets will integrate, and what will be the basis of integration, because we are living in the world of global economy. So how they are going to interact with each other, that will be again very, very important thing. And again, last point, I will touch on it, that deficit financing is also a part of an agenda of development. That is supposed to be, we use it for purpose of economic development of a country. Now, with digital assets, you are transferring 100% value and you are creating 100% value. Are you going to create deficit financing with those digital currencies? How are you going to do it? In this, we have seen the example of COVID, like US issued currency, 5 trillion. The budget deficit went up by $5 trillion. Every country has done the same thing. In case of digital asset and digital economy, how are we going to do that? If we are going to have a centralized digital asset, then all other banks will become redundant. There is no need of any banking. Central bank itself can dish out the digital assets and we move. And different activities and different industries can have retail tokens and they can integrate with the central digital asset or pool. And that is how the transaction can be done. This is what I am thinking of, and I am trying to experiment with that with my own banking licenses. That's why I could talk like that. Thank you.
Julian, from the perspective of the private sector, it's not every day that you get to be part of a new emerging asset class. I've been involved in capital markets for 28 years, and I've not had an opportunity like this with what I think is an asymmetric setup as this asset class has in front of it right now. And so I think all financial institutions, if they don't already, they should have an eye on this space and the progress that it's making. Our clients at Two Ocean Trust are high net worth individuals and family offices, and they want exposure to this asset class, but they want to do it in a safe and secure manner and manage this asset class as they do their other existing asset classes. And so there are not a lot of things that need to be in place before our clients are going to be comfortable investing in this asset class. Fortunately, we're in Wyoming, and the Wyoming legislature and our regulators at the Division of Banking are creating an extremely favorable framework, which is helping us move forward down this path. But I think that we need increased regulatory and legal clarity, more guidance and development in our own KYC and AML guidelines. And Julian, your group, together with the Division of Banking, are going to be helping us there. The technology investment that's occurring in the sector, the technology stack that's being built out for authentication and storage is increasingly helpful in that regard. So I think that there's also going to be this convergence between the sort of native crypto firms who are developing these technologies, who understand the opportunities and are driving innovation, intersecting with the traditional financial service providers who understand safety and soundness, how assets are protected and insured, bring the safety of balance sheets and insurance policies to bear to fuel industry growth. So I think we need sort of both sides of the industry merging together with more oversight and guidance from our regulators.
And simply to concur with what everyone has brought to the table, I believe what regulators are looking for is the public to speak up through their legislative bodies and to move forward with clarification in terms of what is the role of the bank. Coming into the age of data, we believe data will solve a lot of answers. So if we step back and we look at the evolution of regulation, know your customer, anti-money laundering, it basically was born in the 1970s. Who held the data in the 1970s that explained money from my account went to some other party, and was I doing something that was promoting terrorist activity? The only party that held that data was banks. So in the role of banking and the role of regulation, in that case, bankers were required, as were money transmitters, trust companies, and a number of other entities, casinos, and largely expanded out, in order to assist the government in collecting data. That comes with a cost. That has an overhead. And so what is the role of the bank? Is the bank going to be full service or self-service? In the state of Nebraska, speaking personally, I'm quite proud of the industry within Nebraska. As banks have consolidated and as we move from a unit banking state into multiple branches per bank, we've seen the number of banks decrease, but we've seen total assets increase and total branch count increase. So you add the total number of banks, total number of branches together, and there are more opportunities for people to go in and talk to a financial banker, an expert, understands what is about to happen with their transaction, with the holding of their asset. So again, it comes down to an issue of trust, transparency. Government really should not be in the way, but we should set a flat playing field. If you wish to be in a license type called a bank, if you wish to be a money transmitter, that needs to be delineated and explained, and we're working through that. But this is an evolving and an exciting world that Wyoming is paving the way in writing some new regulations, new uniform commercial code, creating a new bank for a regulator. This is about as excited as I get. So thank you.
Yeah, it has certainly, it is, I've never been a regulator, but I will concur that this has been the most exciting engagement I've ever had with regulators, either as an advisor or as the subject of regulation in my prior life when I worked at Visa. Let me, a few reactions, and then maybe we can summarize. Dr. Sindhu, as you were talking, one of the things I thought about was thinking back. I majored in finance in college, and I thought about how do you price a forward, and when you think about how you price a forward, a currency forward, dollar to euro, you're thinking about the interest. You basically the mathematics is really the interest rate differentials. And everything that goes into those interest rate differentials have to do with all of the things that you talked about in terms of the size of the debt and the trust in the institute and the trust in the in the countries, et cetera. And that doesn't exist in digital assets as a pure form, right? Now, as we see this convergence of fiat into digital assets, or digital assets being a representation of fiat assets, I think it's going to be fascinating to see how it is, with CBDCs aside, which I think is a separate conversation, how do those digital representations match the fiat equivalents, and how are they valued? How can you use them for maximum productivity? I mean, it's a very good point. Right, if you have 100%, if you don't introduce leverage into a system, how are you able to grow and take advantage of that, right? And I think it's a really fascinating point. And as it is with almost every one of these conversations that we have in crypto, I just don't have an answer to that. And I love that. I love the fact that we just have to keep thinking more and more about how we're going to do that. So that's really interesting. And Mr. Revill, your comment about this being a new asset class, and basically your clients, and I think they're not alone, looking for a safe and secure way to participate in this asset class. I think, again, as we spoke to earlier, that is only going to bring so much more liquidity into this space. And so there is just a pent up demand for participants to want to enter into digital assets and want to have that as part of their asset class. They're really looking for a safe and sound way to do it. And kind of bringing it full circle again, Director Lammers, I think one of the ways to do that, obviously, and a main way to do that is to figure out a way for the, or to continue the work that supervisors are doing at the state and national level to build those guardrails. I think that some of the biggest challenges, again, we've been on this for several months now, and I can't underscore the differences between managing digital assets and managing fiat assets from a safe and soundness perspective. It's a completely different world, right? There are such unique information security challenges. Which I think are what gets the headlines, because the hacks are what's been in the news. But when you dig deeper, you have to also consider the operational risk considerations. Those, I think, are potentially as difficult to manage. And then, this is another really interesting point that you mentioned, Dr. Lammers, or Director Lammers, about the evolution of regulation and where the data is. We've been doing KYC and AML for decades now. This is a whole new challenge. On the one hand, cryptocurrencies and digital assets as a class and the technology itself provide transparency, which is really kind of, new and novel. On the other hand, there's no single digital asset that's like the other. They're all different, and the underpinnings behind them create, in some cases, their own challenges. I think what the industry looks for is some sort of standard that everybody can build upon. And each of you in your three roles, I think, are going to play really interesting roles in that. And I'm very excited about the future of digital assets, as you can tell. I'm excited that we're having this conversation. I'm really looking forward to the next 6, 12, 18 months of development. And I think we're pretty much on our time. We didn't entertain any questions, so I apologize, but I believe all of our information is on the website in the event that anybody in the audience would like to reach out and would like to continue the conversation. I'm always up for a conversation on these, and I want to thank you, Mr. Revill, Dr. Sindhu, and Director Lammers, for your time and for your insights, and we'll pass it along to the next panel.
Thank you.
Thank you, Julian. Thank you.
Thank you, Julian. Bye now.